to my channel. It is 1:22 Eastern Time, 1:22 a.m. Eastern Time, Sunday, August 13th. I'm going to go ahead and explain the trading terms you should know. Okay, so I'm here with my sister.
Hello.
I'll be teaching her as well, and anyone who wants to learn on this YouTube channel or on any social media, you guys can go ahead and share, post it, make fun of this, whatever you guys want to do. Okay, so let me erase this. Remove. Okay. So this is just a chart. I only trade SPY. Okay.
What's SPY?
SPY is a stock, and a stock is a share in the ownership of a company. Okay. And a share is having a piece ownership in a company. So SPY is the S&P 500. I believe it's 500 of the medium size or small size companies all put together into one. It's an ETF 500. Okay. So SPY, that's a stock, a share in the ownership of a company. Okay. And then, so contracts, you know what that is?
Not really.
Yeah, so whenever you're gonna buy a contract is 100 shares of a company. But you don't need to know that yet. Whenever you start looking at the phone part of English Swim, that's when you start looking at it. So right now, there's the chart. Okay. And okay, so price is 445.59. So that's the base level price. Okay. Base level price 445.59. We make the base level price purple.
Why purple?
Because that's just what I use. People color code their charts differently. My colors are purple, blue, and yellow for the most part. And then it'll be darker shades of purple, or I'm sorry, darker shades of blue, or darker shades of yellow, or lighter shades of blue, lighter shades of yellow. And then blue are for calls, so going up, and what's it called? Yellow is for puts going down. So I'll go ahead and write this down. You want me to write it down, like type it, or just like
Type it.
You sure? Okay. So base level price. So it'll be priced at pre-market and at 9:30. Okay. So pre-market and as soon as the market opens. But most of the times it'll be as soon as the market opens. Base level. Pre-market and 9:30 price. Base level pre-market and 9:30 price. Okay. And then the market is open from 9:30 Eastern Time. So if you're on the East Coast Eastern Time, it's 9:30 a.m. until 4 p.m. Okay. So you got that?
Mm.
Yeah.
Hmm?
Okay, so purple line, what is it?
And the base level
Okay. And what is base level?
is basically what that says.
Okay, pre-market and
The
9:30
9:30 price.
a.m. price. Okay.
Mm-hmm.
And then anything above base level will be for what?
4. It ends at 4 p.m., right?
Yes.
Yeah.
Okay, but anything above the purple line, what contracts are we gonna buy? Most of the time. We'll be buying calls because calls is going up. Okay, but I said most of the time because most of the time you'll be buying calls on the way up. Once it reaches a certain point of calls, it'll come back down, and that's where you can buy puts. Okay. And I know it doesn't make too much sense yet, but I'll explain it in a bit.
Okay.
So right now I'm just gonna go here, just because of I don't want the lines to be too close in with them. So I'll go up here, the highest point, 451.52. Turn that into blue, because blue is for.
It's different colors that you use.
Yes, blue is for calls. Going up.
Oh, okay.
Okay, so right here, that can be a price target. It can be the highest price target. That's just a price target that I'm placing right now. Okay. And I found that price target because right here, this candlestick, right here, this candlestick, this wick, and right here, this candlestick. These two overlap a little. You know what candlesticks and wicks are?
Yeah, I remember you told me about them.
Yeah. Alright, point them out. Let's find a wick.
A width is the bottom right.
The bottom of. You can say I don't know.
I don't know.
Okay. So the wick is gonna be these lines, any line, and then a candlestick will be the rectangles. Okay. So I'll write that down too.
Sure, yeah.
Excuse me. Okay, so wick. I'll place it right here. Should I put what's it called? Like a check mark? There's the wick.
Oh, okay.
Yeah.
Sure.
Alright. So arrow. So arrow going right there. Oh, that's a bit too far out. That's good, right? So that's the wick. And then the candlestick, I'll place it right here. Okay? So the candlestick. Or should I pick a different one? It won't confuse you? No? Okay. So I'll put it right here. Okay, let me zoom in a little bit. I'll probably have to
So
fix
the candlestick is what?
the rectangle. And if you like look more into it, you can get more into depth about it, but I'm just explaining it simple right now. Okay. So the wick, rectangle. Wick is the straight line anywhere. And the rectangle is the candlestick. Oh, my bad. And just fix that.
Alright.
So that's the candlestick and the wick. Then base level is pre-market. You get it? Okay. And then, so anything above, if it's going up, it'll be calls. Okay. If it's going down, price. If price is going up, it'll be calls. If price is going down, it'll be puts. Right? So I'll place put right here on this, because that can be a pullback right here. So we're going up and a pullback. And a pullback is when price hits a resistance, it'll come back down. And when price hits support, it'll come back up. I'll explain that, okay? So this is a pullback. So say price is right here, the purple line. Price comes down. Let's see. Price hits support right here, and it comes back up. Okay. But sometimes it would just break below. So here it was going up. Price came up. Price hit resistance, and it came back down. Okay. Wait, hold on.
And then it went back up?
Yes. So price hit. Yeah, that's correct. Price hit resistance, and it came back down. Here, price hit support, it went back up. Okay?
Pullback.
Yes, pullback. So I'll do that. Let's see. I need to get it right on it.
Are you gonna post this on YouTube? Do you post every single videos on YouTube? If you do, I'll probably watch them.
A lot of them I do, but some of them I don't rush them. Well, I guess I do, but not on purpose. But I do my recaps, I do my pre-market, so my charting, and sometimes I don't go into depth anymore because, well, I know how to chart now, so. So, going down, okay, so that right here is a pullback, okay? So pullback, when price hits resistance, price will come back down. When price hits support, price will come back up. So support is on the bottom. When price comes down, it'll either break support and continue going down, or it'll bounce back up and go just up. When price goes to resistance on top, it'll either break above resistance or get rejected and come back down. Right. So that's a pullback. Let me see. I'm gonna do a circle now. If I do that, will you understand it? Or what do you think right here?
That it goes up and then it comes back down and then it goes up.
Okay, yes, but the major pullback is just this top green candlestick and this top red candlestick. So that's the pullback. The pullback is coming down. Okay? So I'll write that in as pullback. And then since I'm making this video, the next video you can do it, and I'll just correct your mistakes. So, alright, pull back. Okay, so that's a pullback right here. And then when price is going up, that'll be for calls. Okay, price coming down, it'll be puts. So I'll write that down too. Right. So I'll write it down, let's see, right here.
That's easy to remember. Like, if you have a call, you pick up your phone. Then you put it down.
Yes. So I'll put call there. And then going down, I'll change the color on that.
Okay.
I'll do red.
Alright.
So, or I'll do it green. Because green is the money going up. Red is if you're losing.
How come you put the car right there?
I could put it anywhere. But price is right here right now. So I might as well just put it here. And then arrow. I'll place it right here. Okay. And then that'll be a put. And then when you see red, you usually think of losing. When you see green, you usually think of making money. So, pullback. If price is going down, you'll buy puts. If price is going up, you'll buy calls. Candlesticks, wicks, base level is pre-market at 920, and also the 930 price for sure. So, okay, and then supply will be the highest point that SPY will go to before we have a bounce back. So here this is supply, and then inside of supply is support and resistance. Okay. So let's see. So price is at 445, 159. The lowest point 442.61. Inside you'll have your entry. So where you enter. Entry once you get confirmation that you're calling to enter your trade. Okay. So for every trade that you place, you have to have your strategy, and you have to have your entry confirmations so you know when to get in. Okay. I won't give my entry and confirmations away because that took a long ass time to come up with that. But maybe in the future I'll give it away. I won't give it away on video. let's see, so pullbacks. Okay, so supply is the highest point, demand is the lowest point, and inside supply and demand, there's both support and resistance. Okay, so support and resistance creates pullbacks. Okay.
Mhm.
So let's see. So right now I'm trying to find interest.
What?
We're scooting over every inch.
Noise. I'm trying to look.
Alright, let me do it like this. Is that better? Or no? Or no?
Yeah.
Yeah. Let's see. That one?
Sure.
Okay. So inside. So supply. What is supply? Supply. The highest point a stock will reach before going higher or pulling back to the downside. And demand. Lowest point a stock will reach before going lower or bouncing back up. So demand down here. Okay, so I'll write that too. Demand and then supply. Should I write down what they are? Yeah, okay. So supply.
The highest point.
Should I just keep it short or go all?
I guess short, but it makes sense.
Highest point. Let's see, highest point. Because what I wrote down is already short, but I'll try to make it even shorter. Highest point before breaking above or rejecting to the downside. Highest point. Highest price point. Price point before breaking above or rejecting to the downside. Okay, so highest point before breaking above or rejecting to the downside. I'll make that a bit smaller. Okay, so okay, so that's that. And then demand. Demand is, let's see, lowest point, lowest price. Lowest price point. Let's see. I need to check what I wrote for cost highest price point before breaking above or rejecting to the downside. Okay. Price point before. Breaking below or rejecting to the upside. What is that one? Okay, 16. Okay. So there's that. Is that hard or no?
Mm-mm.
No. Okay, so
I think once I study it and get it in my mind.
it'll be easy?
Yeah.
Okay, so pullback. Base level is pre-market at 9:30 a.m. price. Supply, highest point. Hold on. I'm gonna have to. Let's see. I guess I have to make that shorter.
Yeah, I feel like once I actually study it and want to actually do it, then it'll be a lot easier.
Okay, so demand, lowest point before breaking below. So if price comes down to the yellow line, it'll either break below and continue going down, or will reject it. Price will be rejected. Demand will be rejected and will go back up. And on supply, we'll either go to supply and break above, or we'll get rejected and go down.
To demand? Or just go down?
To a lot of times to base level. Okay, so we have that. Let's see. And then a bounce. So bounce will be once we come down, we bounce back up. That one's pretty easy. You just think of a ball bounce. Okay, so we have puts, calls, I explain contracts, shares, stocks. You don't really need to know that yet. You don't really need to know that. Pullback. Should I explain that or no?
Sure. Okay.
Yeah. Okay, so pullback right here. You see it? Is the red top candlestick and the green top candlestick. Right here. You see it?
Yeah.
Right. So when price hits resistance, so right here, price was coming up, it hit resistance and price came back down. Okay, and here, price hit support and it came back up. Okay. But right here, so that was a pullback, so we came up, pull back down, here, pull back up. Okay. Okay, supply, we explained it. Supply highest point before breaking above or rejecting to the downside. Demand lowest point before breaking below or rejecting to the upside. Bounce, once price touches a low price will shoot up. Runners, so whenever you buy multiple contracts, you'll sell a majority of your contracts. So say you buy 10 contracts, you'll sell like 8 contracts, lock in your profits, and then 2 of those contracts, you don't want to lose them all. You don't want to lose all your profits. But if price goes down, you'll lose some profit, but you'll still have a majority of your profit because you closed out of your 8 contracts. Okay, so entry, you have entry and price target. Okay, entry, I explained it, but I haven't shown it. Entry is once you get confirmation that that's your signal or you're calling to enter your trade. And then price targets are where a stock will have pullbacks. So right here,
Mm.
this could have been a price target here, and you could have took profit, and then here price target or final price target, and took profit, and then we had a pullback down, and then from here you could have gotten it on calls again. Price target here, price target here, price target here. You see it, or do I explain
That's
it?
how you could have made money.
Okay, so I'll explain entry for calls real quick. So when you're finding entry, you want to find, a lot of times I'll find the highest point for calls and lowest point for puts. So if you're doing for calls, I already found the highest point. The highest point would be supply. And then I like working my way back down. So I'll find another price target right here around 449.07. And mark it. So price targets are always blue. And then entry is light blue for calls. And price targets for puts are yellow. Entry for puts is going to be light yellow. And then right here, that's another price target. Here you see we're going down. We had a pullback. It went back up. So now when we're going up, we'll go up, and that would be a pullback. So you can take profit there. Okay. Let's see. So we're here. Entry could be around this point right here. 447.14. Or if you want, you could come all the way here. For 47.36. So right here, once price came up here, went back down. See here, price came down, and then we bounced back up. Right there, and down, and then price went back up. Let's see, right here, price was going up, then it came back down. Oh wait, I'm sorry. Let me zoom in a bit. For you to see it. Okay, so right here, price was coming down, had a pullback, went back up. Two routes. Here, price was coming down, and then had a small pullback. Next day we opened up. Here you could place entry on 447.36, and then profit or price target. Every price target could also be a profit point. Okay, but then you always have your final price target. A lot of times, your final price target will be supply. So that's entry. So the bluish white line could be entry. Or you could obviously change it to a different entry. Let's see. Entry could also be 449.07. But that's a little bit further out. So let's see. Okay. So the white bluish line is going to be entry for calls. Alright, and then for puts going down, let's see. Entry for puts will be 444.05.
How come?
Let me see. 441.01. I got it right here. This pullback. And you could put it even a tiny bit higher, but I wouldn't do that. I'd come all the way right here, because right here, All right here. Price didn't really do too much. Price just came here and it was consolidation. Consolidation is this. Okay. It didn't pick a certain direction. Here you can see price chose a direction. Shows a direction. Direction. Here. But here is consolidation. You see? Okay, so entry for puts. Right there, I want to place price targets there. I would go even further in my back testing. And then right here, let's see. Right here, after 444, here, this candlestick, the red one, and this one. So the first top one and then the second one right here. As soon as price reached there, it came to your first price target, the pullback. So right there you could take profit, or you could just hold it in. And then next price target could be here. For, let's see. For 41.49. Then I looked at this right here, this pullback. So we were going up, we had a pullback, a tiny pullback, and then we continued going up. You see it?
This little thing going down.
This green candlestick and the red one. You see it?
I know.
So right here, this green one, and then the red one. So price could go even lower, but you want to be accurate with it. So I chose 441.49. You could go to 441.46. You want to be straight on it. Straight on the candlestick or wick. So price target, you see the pullback right here.
Yeah.
Okay. So that's everything for right now. So I think that's everything for right now. And then the thing you gotta follow is follow your strategy and never rush, or else you will lose. You gotta follow your strategy, your plan. And then I won't give my plan or my strategy away on this, but I'll explain it in person. But I won't explain it right now. Yeah, well, I still gotta make a different video. I'll make it in the next one. I'll explain it in our next session. And let's see, if you guys have any questions, comments, or concerns, leave them down in the comment section below, or if not, DM me on any social media. Like, comment, share, and subscribe, or make fun of this. And that's everything.